What's up, guys? Welcome to Finances with Mason. We're back again with another finance video. Today, we're going to be talking about financial tips and tricks for young investors. So, tip number one for new young investors in 2022 will be to learn the basics about the stock market and stocks that they're interested in. Getting started is fun, but if you're feeling a bit scared, that's all normal. I know when I first started investing and putting my money in the Forex and other markets, I was losing at first because I didn't have the basic knowledge that I needed in order to complete a successful trade and see it through to the end. The best way to start is learning the basics. There are hundreds of resources online that can teach you step by step. They'll give you breakdowns. And then you can also use a demo account or what they call a paper trading account. So you'll be able to get live market feeds on the account, but you'll trade with demo money. So you won't have to risk any of your own real money. The next tip I have for young investors in 2022 is choose a budget. You can start with as little as $20. And what money can you invest today? And think long term. $100 is plenty to start with your first brokerage. So now that we're talking about brokers, tip number 3 I have for you is open up a brokerage account. For most of us here, you're probably over the age of 18, so you can open up a brokerage account anywhere you choose. It's completely up to you and your leisure. Now, I might have a few viewers who are under the age of 18, and you actually do have an option as well. It's called a custodial account. And you should definitely look into that. You'll be the main holder of the account, but your legal guardian will basically be in charge of it until you turn 18 or 21, depending on your state's legal age. If you need any recommendations or any guidance for choosing your brokerage account, feel free to leave a comment below and I can recommend you a few. So now that you've chosen your brokerage account, step number 4 is to purchase your first stock. But before you purchase your first stock, you may want to do a little more research in choosing your first stock to actually purchase. A couple questions I like to ask myself are, what are my interests? For example, if I like things that are made by Apple, or I'm a tech person, then maybe Apple or other tech stocks is what I should go for. Maybe what companies made products for you and your friends that you enjoy, or where do your family members work? Once you have a general idea of a few stocks that you're interested in or companies, you're going to want to do a little more research again. Every company has to report how much money they make and how much they owe, and you can find that on the annual reports online. So now that you've bought your first investment, you can watch them and see if you're making money. The best investment apps let you track your stock's performance using graphs and charts. But one word of caution is that it can be common to get scared when your investments go down. Many people even pull out their investments at this time, and that can be a big mistake. More seasoned traders call that panic selling. Stock prices can go down by as much as 10 or even 20% in a year, and that's completely normal. Remember, if you've chosen companies that you think will continue to grow for many years, many advisors will tell you to continue to hold your investments. All investments have risk, and it's not uncommon for someone to lose a good portion of their money, but the stock market has consistently risen over its history, so the longer you stay in the market, the higher your odds of success rise. Thank you guys for tuning in. I hope you like, subscribe, and comment, and I'll see you on the next one.